Yeah, hello everybody. It is the Friday Eve, as we like to call it here. Friday Eve is always a good one, and I have the crypto master himself with us today, Howard Greenberg. So this is going to be a great one. I was talking to you guys in my rooms today about that this isn't just a talk about Bitcoin or Ethereum, but it's really a talk on how the whole ecosystem is now really starting to transform the way that we do things, the way that we process financial transactions. And Howard's going to go into that here momentarily. Give a quick market update for the day. I've said this in both of my rooms today. Can everybody hear me, by the way? Brad, I see you there. Thank you very much. Can everybody hear me, see Howard, see me? Everybody good? Let's see that in the chat before I make sure I'm just not talking to me, Howard, and the dogs here.
My dog's listening also.
Yeah, the dogs are fine too. That's great. I have no problem. Okay, there we go. Awesome. So early this morning on the hot. I think that was a Buster Poindexter song, by the way. We'll have to play that later. Hot PPI inflation report this morning. Market sold off. We saw S&P's down about maybe 30 points at their low. They recovered all the way back to unchanged. Now they're just down slightly. I'm really surprised that we're not seeing the market lower, though tech is getting hit a little bit today. And that's because there's been a pretty sizable shift in the Fed outlook for potential rate cuts. Just yesterday, we talked about, and I brought into Market Minds here, that the CME FedWatch tool was showing basically 100% probability of a cut in September, another one in October. That has changed quite a bit today. So that is really what the the hesitation is, what the kind of sell off in some of the tech stocks are today. See if that recovers. But right now, S&P is pretty much at the flat line. The Dow is down about 160 points. NASDAQ is down about 100 and no, I'm sorry. NASDAQ is almost right at the flat line now. So anyway, if you guys can all smash away, please, and like and all that good stuff, especially since you have both Howard and I today. I'm going to turn this over to Howard right now. I'm going to just, control the slideshow here. But if I was talking about Bitcoin, crypto, DeFi, Ethereum, you would want to turn your speakers off. So you want to listen to this guy right here. So Howard, give us an intro into what is going on.
Sure. So, Bitcoin hit an all-time high, first of all, again, last night, 124.6 and change there on Bitcoin. So a little bit of a natural pullback. And then, as Scott mentioned, those high-flying PPI numbers sent us, sort of tumbling down pretty quickly today. A big part of that is because that, after that natural reaction, we were already seeing some liquidations as some bulls really went a little bit too far into the leverage. Bears have gotten beaten up the last 2 weeks. They took advantage, and they definitely pushed us down today, down about 117,800 here. Ethereum back down to 4540. So that's what we're seeing, but all very, very, very healthy structure here. And what, as Scott has switched it over, want to point out is Ethereum. What we've really seen is the bell cow of the crypto world the last few weeks, driving us to the top. I always say Bitcoin drives the bus and everybody else is in the back. That's not the case right now. Ethereum really has been driving the bus. We've seen a huge amount of demand from these corporate treasuries, right? A lot of you that are in Charlie's and all those rooms. Hey, Aladdin and Robert, by the way, good to see you guys. We've seen just huge buying. I just was looking at the numbers. BMNR, which is Tom Lee, the guy from Fundstrat, that is his Ethereum treasury company. They are already holding $5 billion in Ethereum. So there's a huge amount of buying coming in. You know what I mean? That's the key, is definitely, these Ethereum treasuries, the Ethereum focused ETFs, all of this is coming in, and it's coming in quickly. We're seeing it. And why is that happening? We just in the last 2 weeks have seen real guidance come out of the SEC and CFTC. And for Ethereum, it was a big deal because they have not only cleared Ethereum of being a security and set all that up, which we all sort of already knew, but they just green-lighted or approved the ability to stake, for these ETFs to actually stake their Ethereum. And that means you can look at an additional yield above just the price of the underlying asset. So huge.
Yeah, Howard, can you talk a little bit about what staking means?
Absolutely.
It's really popular, but I don't know that a lot of people truly understand what it means.
Yeah, what you've got to keep in mind is that Ethereum being the one we're talking about here, so we'll just stick to that. Back when they did their version of an IPO, which was an ICO, when they set it up, they kept a large amount of tokens in reserve to be given out as rewards to those people that will help secure the blockchain. And that's what staking does. When you stake your blockchain, you basically commit your money behind the chain. And with it, you get a percentage of the rewards that come, or the transaction fees that come, and these set rewards that are set for, basically eternity out of the foundation. And that's what staking is. So you are securing the actual blockchain. You are, as opposed to someone else earning the money. And when you want to think about it as a bank, you become the market maker, not the person going to the bank. It allows us to be the bank for these companies. So it's a huge thing. It's, a set on Ethereum. It's about 4% extra yield you can get on it. Solana and some of the others are 8 to 12%.
Being the bank is always a good thing.
Yeah, right. And that's what it is exactly, it's going to lead into what we're going to talk about next with DeFi and everything else. But that's what the future holds. The future is no longer JP Morgan holding your money and taking your money and using it for their own purposes to earn income, right? The future is DeFi. Decentralized finance is what DeFi stands for. And it's revolutionizing what we're seeing. It's going to be a tsunami of what's coming in. And the reason is TradFi is lining up at the door to bring you there. Because while there's still not the huge efforts and the huge amount of money for them that they maybe make on traditional finance, the way they charge us, if you don't have enough money in the bank, maybe that's $16 to run your bank account or checking account. It might not be that, but there's still money for them to make in this world. But what it really is, when it comes to DeFi, we become the bank itself. So for lending and borrowing, it means that we're the people that lend out our Bitcoin, our Ethereum to other people who want to borrow it. So we earn that yield that normally the bank would take, right? So that is what the future is. And Scott just pulled up a chart that I had, which is the total market cap of all the DeFi protocols. And I brought this up because it shows how we're not even really scratching the surface. And what I mean there is, back in 2021, it was at about $200 or $2 billion. Right now we're down at about 1.3. Oh no, I have that wrong. It was at 200 billion. We're back at about 130 billion right now. And that's as Robinhood just announced, a month ago, that they are going to do all of their trading in Europe on both stocks, cryptos, options, all of that stuff on blockchain. So they're going to use decentralized finance to move quickly. And it's what you're seeing is, since that announcement, everybody is quietly doing pilot programs. And the other part about that regulatory scrutiny that we talked about is, or regulatory clarity in this case, is that the SEC and their commissioner, Mr. Atkins, came out and specifically ruled out or carved out legislation that is looking to allow what they're calling super apps, a regulatory sandbox to operate. And a super app is what Coinbase is looking to be, what Robinhood's looking to be, a place that you will be able to go to trade crypto, futures, options. I said crypto, right? Spot crypto and stocks all in one place. And that's what they want to do. So as a response, we're seeing JP Morgan and everybody else jumping in and trying to start these partnerships because they now want part of that money and they want to be part of that world.
So let me ask you something. So, at the beginning of the whole crypto thing years ago, we heard about blockchain, blockchain, blockchain. And for the average person like me and many other people, not really understanding what the blockchain really is, how is this now affecting the blockchain?
Sure. I'm going to take it two ways on that. The first one is why blockchain matters is settlement, right? We know that what the world wants is to make a trade, have that trade settle when they hit the sell button, get the cash back into their account and be able to retrade that again, right? Or reallocate your assets. And what we've seen is the stock market move from T+2, which it used to take 2 or 3 days for things to settle, to T1, where now it takes a day. The reason this is so transformative is it's going to make it to instant settlement. So that's why it matters from that side. Why does it matter to blockchain? Because think about the trillions of transactions that are happening across the globe in these stock exchanges on the futures markets. Those will, in the future, almost all of them are going to settle on blockchain. They're going to use the rails of blockchain to provide that instant finality because that's what it allows. And this is perfect. Yeah, this explains decentralized finance is peer-to-peer, attempting to remove third parties. So again, we become the bank, we become the loan officer, we become the money market manager, whatever you want to call it. And for some people, it means even becoming the hedge fund manager because it's how these DeFi apps are sort of aggregating liquidity and becoming hedge funds. And it is what we're seeing is this connection between traditional finance, who absolutely did not want to go this way. They love their legacy systems, people like Citadel and others very much like the way everything is now because they have a built-in advantage, right? They are the banks. They get the information faster. That's how they can do this stuff. What DeFi is going to do is remove those hurdles. And it means that, it gets away, we know that as a result, the stock market's moving from 25,000 for, patent daily trading, right? All the way down to 2,500. This is why, because this shift is TradFi trying to get ahead of what's coming, which is DeFi looking to offer all of these things. When it comes to trading, you become the market maker. You're the one on the other side of the trade. You provide liquidity to the decentralized exchanges. The trading happens and you get the fees,
So Howard, does this mean that the evolution of being able to go to the grocery store and pay with crypto or whatever it might be, it's kind of actually happening now?
Yeah, you won't even know it's happening. In other words, the rails, what's happening, and even Visa and MasterCard are on this. We see Visa and MasterCard using blockchain behind the scenes, and they send it using blockchain. You don't know they're using it. In other words, you'll never know you're interacting with blockchain, except that everything's going to happen quicker and for less money. That's the promise of it, is that it these things, and keep in mind that for the last 4 or 5 years, these things have been being put in place. Companies like, I see Robert asked about XRP, Ripple and XLM that have been working with banks on this stuff outside of the US. Now it's coming to the US, and in a big way and quickly. And that's the change that you're seeing is, back in 2021, when there was $200 billion in DeFi protocols, that was meme coins. That was NFTs.
Right.
Now you have trading of tokenized stocks. Your NVIDIA trade is going to happen on a blockchain. That's a lot different. That's what we mean about a revolutionary change. This time that, little window of fun isn't what's going to happen. It's going to open up to an extended, move of liquidity into crypto and blockchain.
Got it. Before we move on any further, we're still going to use Ralph Cramden today. We used Jackie Gleason yesterday. Let's get the word of the day out there and get the wheel rolling here. All right.
First. He's always the quickest to the gun.
You think Ralph Cramden, Jackie Gleason would have known anything about crypto, the blockchain?
No.
I
Yeah.
don't think so. I don't
You
think
know,
so. He didn't have two pennies to rub together, let alone any crypto.
absolutely, absolutely. And I will mention, the other connection between TradFi and DeFi you're seeing is that all these companies are becoming public companies pretty quickly, right? Bullish being the latest, is a Bitcoin native exchange. Also,
Speaking of bullish, in the ticker symbol, guys, this just IPO hit a couple days ago. BLSH bullish. Are they a competitor to Coinbase?
yeah, different in a different world. They really are a Bitcoin Bitcoin maxi type situation there, where they really only work with Bitcoin trading and a few other coins. Their world is more about unlocking DeFi on Bitcoin is what their goal is. Is that them, Jack Dorsey at XYZ Block, Michael Saylor at Strategy, obviously they're working on providing or creating. Right now, you can't use Bitcoin natively in DeFi, and they're working on those connections.
Got it. Thank you. Thank you. All right. More about DeFi.
So yeah. So again, why is DeFi? What's the difference? Like I said, the SEC's new token custody guidelines, the CFTC's derivative clarity, and what just came out of the White House and Digital Asset Working Group have really opened the floodgates to TradFi. You're seeing announcements already by most of the major banks about getting into stable coins, whether that's in partnership with Coinbase or Paxos or whomever. But you're seeing that connection. And what we're also seeing is outside of a few major banks, they were caught behind. JP Morgan has a large amount of Ethereum developers that already work on their JP Morgan coin. The other banks don't. So they're looking to partner with the crypto native companies. That's the other thing. And like I said, the liquidity is just coming. It was 199 billion in the peak of 2021. And right now, we're still well below those highs, 130, I think, as of today, because everything's taken a hit. But what we're seeing is the reason that DeFi is growing is World Liberty Financial, which is, the Trump and Wyckoff based company that's, in the space. The evolution of Robinhood looking to use it. Coinbase already has a lot of this functionality built into their app. Gemini just announced some exciting stuff today. You're seeing all of these crypto native companies, but also you're starting to see Wells Fargo and Bank of America and Fidelity, Schwab, all offering crypto trading. And what's going to be the next stage to watch is because some of the largest futures companies are owned by crypto companies. I don't know if you guys know that. Kraken owns NinjaTrader, and Coinbase has its own derivative. It was a smaller one, but now has its own futures. The futures markets are the ones that are quickly moving into blockchain first. And then Robinhood, like I said, leading the way with the exchanges. And, to keep up, the other TradFi companies are going to have to do it. So if you are new to this and you're saying, how do I keep an eye on what's going on or cyclically? Because what normally happens is Bitcoin runs at one time, Ethereum runs at another time, and then the altcoins do. I have a pretty simple signal that you can use to do this. It is called the Bitcoin dominance, or BTC.D, across many of the different trading apps there. And what Bitcoin dominance is how much of the actual total crypto market cap is Bitcoin. Right now, it's about 60%, down from 66% earlier in the year. So as I said, starting with Ethereum and now moving over to some of the other altcoins, is what we're seeing is it's starting to have that ripple effect and it's starting to change. But what I will point out is we are far from what we call alt season. If we go back to 2021 and look at it, it was about 40%. That's when all the alts doubled basically their share of the crypto market cap. So we are very early in the innings of the alt rotation. Ethereum's breakout is leading to higher, cap layer ones, what I call the blue chips of the crypto world, the chain links, the Aves, the Uniswaps, the Solanas. they are all starting to really take off. If you go much further down the market cap, they are not. In fact, after today, they really got hit. A lot of those still under their 200-day moving averages. Gene, great question. Forex will be one of the first ones that moves to the world of blockchain. I do a show with Stephen Flanagan, the former head of JP Morgan's Forex trading on Quasar, and he has talked about it, they will absolutely, because of their 24/7 type of trading and the need for instant settlement and liquidity, are absolutely set up first for blockchain. That's why you'll see a lot of Forex traders are some of the early adopters of Bitcoin and Ethereum.
You know what I found interesting, and this was a report that actually came out yesterday from the CME. Let me read it here. Talking about the dominance, excuse me, over the last month, Ether's price has increased about 55%, while Bitcoin's price has increased 1%. The result, the Ether Bitcoin ratio. So this is also another, Bitcoin dominance type of metric here. That's more than double since late April. And I'm reading this from the CME here. And you can actually trade at the CME the Ether Bitcoin ratio futures product. There's actually something that you can trade, just like people will trade the gold silver ratio. That's like an old tried and true ratio. You can trade the Ether Bitcoin ratio as well.
Absolutely. And that is a great point, because it's one I use a lot to, again, look to see what is a value, what's a better value, sometimes Bitcoin or Ethereum. And that's down to about 0.03858 right now. It's been as high as, or as low, I should say, as like 0.02 recently. So it's actually really recovered, like you said.
So Howard being on today is a perfect segue to Howard being on tonight. Howard will be presenting a live Webby tonight, 7 p.m. Central, 8 p.m. Eastern time. And he is going to talk really about what we were just talking about today. But it's not just an informational Webby on what crypto or what DeFi is. It is actually how to trade it. And those of you that are in Howard's crypto room knows that, he is just crushing it. So yeah, it'll be a little bit informational about the backside or the back end of what crypto is. However, it is going to be how to trade it, how to follow Howard's signals. So if you are interested, I am going to post up a link here. Danny, if you could do that.
You already did. You just did it.
Okay. Yes, there it is. Awesome. That would be fantastic. Any of you that want to join, I will be emceeing it, but you're not there to see me. You're gonna be there to listen to Howard tonight. So, all right, we have got the wheel closed. Danny, are we almost ready with the wheel? And then someone was asking Howard while we're waiting for that.
The trading den. ETH perp is the perpetual future, and it shows you how far crypto has come, and that now in the US, it is legal to buy a basically no dated. It is 6 years dated out to 2030 in full there, but you can buy a perpetual future with 10x leverage in the US on Coinbase, Kraken, and other exchanges, and not have to worry about Contango and some of the Greeks that get involved, Theta especially. That Scott worries about in his rooms. I don't have to worry about Theta on that. I am able to just pick the trade based on the technicals more than the Greeks. So it's a way to get leverage, to use less money to control a bigger trade, and it allows us to do a lot more now than we could just a year ago.
Awesome. Howard, I think we have to have you on more often, because this wheel is absolutely jam-packed.
I love it.
Today.
I expect to see everybody tonight for the webinar. We got some good stuff.
Yes. Give me Howard, give us a countdown of 3, 2, 1, and we'll spin this.
Ready? 3, 2, 1.
Yeah, there's the big drum roll. I can't even watch this. I'm getting dizzy. All right. We have got David Ricardo. Oh, RDB. So
Ricardo.
once again, Ricardo, yes. Are you in the house? Normal indicators.
Question. I use all normal indicators in the room. In fact, if you ever see Charlie's stuff, him and I use very much the same indicators: SATI levels, ATR, VWAP, linear regression, you know, all those things. So yeah, absolutely. There is on-chain data that we do also, just so you know, that matters in crypto. We look at liquidations, funding rates, open interest, a few other things that you have to learn.
Thank you. And Ricardo, boom, that was a quick response. Wonderful. So as always, send me an email, please. I'm going to put it in the chat here right now. Boom, right back. I love it. prosperswag@prospertrading.com. Shoot me an email there with your swag size, mailing address, and we will hopefully see everybody there tonight. Howard, we should keep you on longer because we've gone in the S&Ps. When we started, we were down about 12, then 6, and now we actually just ticked positive. So
there you go. We're trying to mark it up for sure.
Nicely done. Nicely done. All right. Thank you so much, everybody. Howard, awesome as always. You are the master, and we just love having you on. So we will see everybody tonight, and hopefully we'll see you tomorrow. Take it easy, everybody.